index of leading indicators is plummeting for a 13th straight month in April, and it's warning of recession. It's warning of a tough recession. I raised this point last night. Nobody wants to talk about it. I'm going to raise it again because we've got the smartest guy joining us, is Kevin Hassett, my pal, former chair of the Council of Economic Advisors, author of The Drift, Stopping America's Slide to Socialism. It's the most important book of the 21st century. Kevin, I'm trying to get people to focus on this. You've got 13 straight months of decline, the index of leading indicators, and it's a pretty good forecasting tool. On top of that, as you know, we've got a contraction in the money supply, M2. We've got a very deeply inverted yield curve. Look at that chart. We're charting the full screen. You can see what a good predictor the indicators are. M2 is contracting. The yield curve is upside down. Commodity prices are very, very soft. Inflation continues to linger. You know Ed Hyman, I think 42, he's a friend, a great friend. 42 years, Ed Hyman's the top economist in Wall Street. He won the voting. He's predicting now negative GDP in Q3, Q4, and Q1 next year. What do you think, Kevin? I think these are bad signs. What's your thinking?
Right. You know, I agree. And one of the things that I follow closely, that you've been following closely for decades, is the Conference Board has actually a thing that's very similar to, you know, when you watch the football game and the team's ahead 28-0, then they tell you the win probability, you know, and then it can get up to like around 99%. And they've started showing that to sports fans. Well, the Conference Board calculate a probability that in the next 12 months we'll have a recession. And that's been a really, really good indicator for whether we are or not. And right now, the Conference Board probability of recession over the next 12 months is 99%.
Wow.
And so, you know, sure, the Patriots came back and won the Super Bowl. And so it could happen that you could have a win probability, or here, I guess you could call it a lose probability that high. But something that high is really striking. And there's never, ever, ever been a probability that high without us then having a recession in the next 12 months. And so that's why Ed Hyman, I'm sure, is leaning into the call, because, you know, Ed doesn't make calls unless they're going to be true. That's why he wins the prize every year for best economist.
No, he's very careful. He looks at, you know, he sifts through the data. I mean, that's important. You know, also, Kevin, speaking of probability, the New York Fed model using the yield curve. So that model now with the yield curve deeply inverted, I think the latest update I saw was 68% probability of recession in the next year. I'm just saying, I think people are sleeping. That's all on this. And the other point is, we've got now, I want to get your take. Jay Powell was out and about talking. He thinks we could, it looks like he's open to pausing on the Fed target rate. I'll get your take in a minute, but we got a little sound from what Jay Powell said today. Take a listen.
While the financial stability tools help to calm conditions in the banking sector, developments there, on the other hand, are contributing to tighter credit conditions and are likely to weigh on economic growth, hiring, and inflation. So as a result, our policy rate may not need to rise as much as it would have otherwise to achieve our goals.
So what do you think? Is he going to pause, Kevin?
Yeah, I think that's a clear signal that they're going to pause, don't you? I mean, the fact is that they started too late and now they're ending too soon. And what that means is that inflation is going to stay high. And you know, it's not just me. Like, you've seen what happened to the bond markets this week. You know, Treasury rates skyrocketed because they basically decided, okay, well, the Fed's not serious about going after inflation. And I think that Jay basically made that 100% clear. Now, he might argue that, well, Larry, you know, you and Kevin are being inconsistent. If you really think there's a recession coming, then sure, maybe the Fed should hold off. But the problem is that inflation is really high. And if you go back and look at the 70s, then what happens is that the economy gets sort of weak, like we are right now, and then the Fed chickens out, and then inflation continues to skyrocket. And so, yeah, frankly, I think that the Fed is going to pause, and I think that means that inflation is going to be, you know, still in the 4 or 5% range as we head into next year.
You know, Kevin, the thought occurs to me, if Kevin McCarthy's plan would pass, it's a $5 trillion reduction in spending over 10 years. That's the kind of thing, and it opens up the fossil fuel spigots. It has some work requirements, so there's supply side incentive effects in there and lower spending. That's the kind of thing that would help the Fed so they don't have to keep jacking up rates and might lower inflation expectations. You know, it might give some confidence to the economy, because it doesn't have any confidence. That's in this Conference Board metric. So that's why it's very important. It'd be nice if the fiscal budget policy was consistent with the monetary policy.
Right. And I'll actually go ahead and make a prediction here, Larry, and hopefully we only see the good side of this. But for sure, if we come to a debt limit deal that cuts spending a lot, then markets will celebrate. Equities will go up, and interest rates will go down. 100% that's going to happen. I'm making a prediction right now. We can come out and talk about how wrong I was if it turns out the other way. But the other thing I can tell you is if we lift the debt limit and don't cut spending, then it's going to go the other way.
Right.
Because what it means is that this out-of-control government that's basically doing to the fiscal situation what the border crisis is doing to towns all across America. That the Democrats are so serious about destroying our country that they're willing to blow the fiscal situation up the way they're blowing everything else up. I think that's going to be the kind of thing that sets off a market panic.
Yeah, well, you're right. They got opportunities here, but if they miss the opportunity, it's going to be trouble. All right, Kevin Hassett, the best of the best. Thank you. Appreciate you coming on today.
Thanks, Larry.